Hi everyone, and welcome to the latest edition of FS in Focus. I'm Nicola Carter, a partner in our banking and markets practice, and today we're diving into a part of the industry that's often overlooked, but absolutely critical to keeping markets running: post-trade. It's often seen as the engine room of capital markets, quietly powering everything behind the scenes, from validation and confirmation to clearing, settlement, reporting and risk management. In recent years, it has become a focal point of significant change and gained more mainstream attention. To help unpack the opportunities and challenge this presents for market participants, I'm joined by Alex Fitter, an operations expert in our banking and markets team. Welcome, Alex.
Thank you.
So Alex, let's start with the big picture. Post-trade is hotting up across the industry. What's behind this surge in attention?
So there are a few different drivers. The rise of retail investors and the behaviors that we see with them is definitely having an impact. So we saw GameStop in 2021. Off the back of that, there was a heightened expectation on clearing and settlement providers and the speed at which that needs to happen. So the US has moved to T+1 settlement already. Europe will move to in October 2027. But we're also seeing some more demand around 24-hour exchange trading as well. So we're also seeing drivers around policy and regulation. So the 2024 Draghi report emphasized the need for greater focus on market plumbing and European competitiveness. Then there's the changes in terms of innovation, structural innovation. So shortened settlement cycles, extended trading hours, a move to digital assets and distributed ledger technology is all driving the need for investment there. We also see drivers around efficiency. So people looking to reduce cost, drive out greater efficiency within their post-trade operations as well. And then finally, what we're starting to see is more focus on FMIs as a result of risk management. So more volatile markets leads to increased focus on those partners in the infrastructure that support our risk management processes.
Thanks, Alex. So lots of drivers there, and with increased focus comes increased pressure. What are the most pressing challenges facing the industry as it adapts to this new landscape?
So there are both macro challenges and post-trade specific ones. From a macro perspective, Europe has a growth problem. The difference between US and European markets is quite significant. In Europe, 89% of funding comes from banks. That's for households and businesses. In the US, it's only 49%. So capital markets in the US are significantly more advanced in terms of where they're getting the funding from. Now, the Savings and Investment Union, which was formerly the Capital Markets Union, is looking to address that. From a post-trade perspective, the biggest issue is fragmentation. So in Europe, there are something like 33 different CSDs. In the US, there's one. In Europe, there are 16 CCPs. Again, there's only a handful in the US. This leads to a whole load of operational risk and cost for consumers. Consolidation to the Draghi report highlighted that proposed a single CSD and CCP. That's never going to be possible in Europe, certainly not in the short term. But what those infrastructure providers will be doing in the short term is looking at how they can become more efficient and how we can increase the level of interoperability between them to reduce that cost and reduce that operational risk. For buy side and sell side, there is a challenge around balancing short-term drivers with a longer-term picture. So how are they managing between addressing short-term tactical issues, subject to T+1, and looking for future investment and how you're setting yourselves up to support that shortened settlement cycle, that 24-hour trading, all of that piece. So they need a clear plan on tactical innovation, strategic innovation, and how they fund that. So what the big driver at the minute, or a really key focus at the minute for CIOs and COOs, how they get that funding as well as the plan that sits around it.
So plenty of challenges, particularly in Europe, given the backdrop of that market. Where do you see some of the biggest opportunities emerging looking forward?
So from an opportunities perspective, the first one is, how do you mobilize Europe's savings? So there's vast savings locked up in banks, enabling that shift into capital markets investments is really key. How post-trade can support that and enable that will be a key opportunity for post-trade operations. Distributed ledger. Now, that's not something that's going to happen in the short term, but can potentially transform our centralized model quite significantly. There are great opportunities for innovators to come in and shape the way that ecosystem will work in future. Digital assets is really interesting at the moment, particularly stable coins. That's probably something you can spend a bit more time on in a separate In Focus session. And also operational transformation. So in delivery of AI, machine learning, digitized workflows, cloud-based technology, all of these things that enable you to remove cost from the business and drive towards a more efficient operation that's able to shift its focus from being a cost center into a strategic enabler for the business, much more closely aligned to the business needs, enabling growth in future, is a really key opportunity. Really key to that transformation is upskilling your existing workforce and bringing in new talent.
You're right, and digital assets is a hot topic that we can come back to another time. But given all this change for post-trade, firms need to be proactive. What should they be doing now to stay ahead?
We need to be able to answer a really fundamental question. Are our post-trade processes fit for the future? So that means reviewing operating models. Are we able to manage shorter settlement cycles, 24-hour trading, etc.? Investing in scalable technology. Where are we going to spend our investment that enables the growth in the future? Are we ready to manage regulatory transition and change? T+1's a prime example. And then finally, and probably most importantly, is how do we adapt our mindset to deliver operations in a different way? How do we change from being a cost center focused mindset to really being a strategic enabler for growth and resilience within the business?
Thanks, Alex. I think that's a really good point to finish on. Post-trade is clearly going to be a focal point of significant transformation over the next few years. Whether you're a market participant, infrastructure provider, or regulator, now's the time to engage, innovate, and collaborate. Thanks for watching FS in Focus, and see you next time.